Let's get to some trending tickers that we're watching here. Tesla snapping its winning streak. Shares are actually moving to the upside this morning. It's up over 2.5%, but this comes after Bloomberg did report that the company is delaying the unveiling of its robotaxi by 2 months. Now, this comes as the stock is coming off an 11-day rally that was sparked by better than expected delivery numbers for the second quarter. That jump initially wiping out the stock's losses for the year, then moving back into negative territory for 2024 after yesterday's losses, and now we are seeing the stock moving back to the upside this morning. So for now, we are going to bring in Jewsikow, Guggenheim Securities Director. This is Ron. Sorry about that, Ron, my read there. Director of Automotive Equity Research for more. Ron, thanks so much for joining us here. So it's interesting to me, this reaction, given what we know about the robotaxis here. Is this the latest indication of the facts and fundamentals of Tesla not necessarily being the key driver of the stock?
Yeah, I think that's probably fair. I would point out today specifically that the entire EV space is moving to the upside quite a bit. I think there's probably some either short covering or some squeeze dynamics going on today. But yeah, related to the robotaxi event specifically, I think the issues yesterday and why it was such a pronounced decline for the stock was, I think it's important to think about the genesis of the robotaxi event. It was during Tesla's significant downward move in the first quarter of this year when there was a report that they were delaying or canceling the next generation platform. And that same day was when the robotaxi event was announced. I think by some investors, it has been viewed as a bit of a defensive or a massive pivot, at least for the company, away from affordable EV models in the future to robotaxis. And to the extent that they lack some credibility there, which I think a delay at least leads people to believe, that is an issue for the stock. It was also just very overextended, I think, coming off the rally post deliveries and the energy deployments.
Ron, how confident are you that we actually are going to see robotaxis from Tesla one day?
One day is a very long timeline. So I would say I'm more confident than not in one day. I would say prior to 2030 at any scale, I think it's very unlikely. I would expect testing to be done before 2030 to the extent they're serious about this as a project, which they certainly seem to be now. So I would say post 2030 is when this is a meaningful contributor to the business, and I would say even probably well into the 2030s before this is really at scale.
Tesla's 30-day volatility is really outpacing other car makers in the space. Does the volatility around Tesla make it a better play for day traders than investors?
Yeah, I wouldn't say we talk to a lot of day traders, so I don't have a ton of perspective on this, but I would say post the delivery and energy deployments number, there has been a consensus view in the market, both among, I would say, long only and long short investors, that this was a very difficult stock to be underweight or short into the robotaxi event. You have summer trading dynamics, a heavy retail interest in this stock. So there were a lot of investors on the negative side that had stepped aside both before deliveries and after deliveries. So I think a lot of this move post deliveries has actually been driven by retail buying. And I think if you looked at a stock chart that looks like this historically, algorithmic trading tends to kick in as well to the upside. But that is a bit out of my purview, so I'll try and stay in my lane.
Ron, let's talk about the presidential election. Hopefully that is in your purview and something that you can comment on, and just in terms of what this means for the EV industry and specifically Tesla. Because when we talk about the potential and possibility of a Trump presidency, of course, many of our viewers and investors out there think about what exactly that could mean in terms of the rollback of EV subsidies. I'm curious, if we were to see Trump elected in November, what are the implications then for Tesla?
Yeah, it's a good question. It's one that's come up a lot recently. I think people trying to make sense of Tesla's move to the upside if there is some perceived Trump benefit for the stock. And I know there's been some noise about that in the market. We really struggle to see this as a benefit to the extent Trump's elected. You mentioned the $7,500 credits at risk, which is a key affordability enabler for Tesla vehicles. Also, the Chinese batteries potentially seeing higher tariffs. Tesla's lowest price models in the US do use Chinese source batteries, as do other manufacturers. Tesla's not unique there. And at the end of the day, this was a rising tide lifts all boats scenario. I think the analog to that to the downside is a receding tide. It doesn't necessarily sink Tesla's ship, but it does sink some ships, and it's certainly negative for everyone. But ultimately, Tesla had more benefit from the IRA than any corporation in the world as a percentage of revenue.
Ron, whose
So
ship
it's
does it
tough
sink?
to see this as a positive. I'm not getting into whose ship it might sink, but it'd be pretty negative for EV manufacturers that are struggling to turn a profit
Right.
today. Even.
Yeah. So off of that, then, at least for Tesla, could it at least maybe put them in a better position than others, given the strength that they do have, given the fact that they are profitable, given their market share, that maybe they are able to weather the storm a bit better than some of the others within the marketplace?
Yeah, the relative argument, I think, is where the perceived Trump benefit comes from for Tesla. I think that ultimately it's a net negative for everyone. Even if Tesla is relatively better, it's still negative. And we actually struggle to see that just looking at the percentage of revenue that benefits for Tesla. It's dramatically higher than anyone else. But they would still be structurally profitable, so as a going concern, certainly it's better positioned, but the stock is certainly priced well beyond what a going concern would be at this point. And at the end of the day, the only other positive I've heard is that it does push out the risk of Chinese manufacturers coming to the U.S. I would say that most people in the auto industry don't view the Chinese local manufacturers coming to the U.S. as a real risk. I think it's one thing that both political parties actually agree on is protecting the U.S. auto industry. So I think that's a very low risk at the end of the day.
Just to get a little bit more clarity on that, Ron, do former President Trump's proposed tariffs on China does that purport a risk to car makers here in the U.S. because of the inflationary impact, or are you saying that that risk is overblown? Give me some clarity on that.
Yeah, no, I think that it does hurt their cost of goods sold because the lowest price models for many manufacturers use Chinese-based what's called LFP batteries because that is the lowest cost battery in the world today. So it's a risk to profitability for all EV manufacturers. It does push out the risk that BYD and others would be able to import cars into the U.S. profitably. So it does, I guess, decrease the competitive risk over time. But BYD said publicly they have no plans to come to the U.S. anytime soon. I don't think it was a real risk that was ever discounted in this stock. So from a stock perspective, hurting the affordability of Tesla's most affordable model, making it more expensive to produce is a net negative, which is what the China tariffs have done.
Ron, it's always good to have you. Thanks so much for hopping on with us here this morning. Have a great weekend.
Thanks, you as well.